Hello everyone, very good evening again to you all. Charles here of FRGNT Daily Chart Analysis. Just back with another couple of breakdowns of the pairs that I'll be looking at going into week 46. Today is Sunday the 9th of November 2025, pre-London Open, as I said, of that week 46. So just taking a look here at AUDUSD, and as always, we'll go to the bottom right-hand corner just to gauge the bias of the previous weekly candles, any wick imbalances that we could potentially marry up as we superimpose those on the lower time frames to see if it aligns well with structure and the overall price action. So on that weekly time frame, your attention to that bottom right hand corner weekly time frame, what we can see is that the current weekly candle, the previous weekly candle close, has done exactly what the previous four weekly candles have done, and that is rejects that weekly 50 EMA. So it's done its job. However, with that said, as always, I mark the previous weekly highs and the previous weekly lows, again, just to superimpose that across the time frames to see if it aligns with any probable areas. So what we can say is that from these previous weekly lows would be more than likely my highest probable area for a long position. However, as we bring that over to the daily time frame, we can see that there are no order blocks in and around that area. However, the AU trade that I took on Friday again did not necessarily come into a higher time frame order block, but as I always say, wicks get filled. So price came into a previous daily low area of the wick, which allowed me to marry up with lower time frame structure for me then to take the long position on AU on that Friday evening before closing it out. So what we can see is much of the same. We'll mark that previous daily low and see if price does come into around that area, which as we then bring our attention to the 1 hour time frame, it does match up. We've got a 1 hour order block within that area around that previous daily low, and refined we have a 15-minute order block as well. So I'll be very interested to see when price comes into this area how it is going to react. We do know we've got Asia still to be filled, so we'll be mindful of, although we would be looking for a position from that 15-minute order block, and at the moment an 11 pip stop loss does do it justice in terms of covering that Asia low, or the Asia to be filled. What would be better is if price does come into that area, it doesn't reject it immediately. It still comes down. It then gives us our lower time break of structure below that 15-minute order block, then gives us our entry and explosion. So what that would look like is a position entry just below that 15-minute order block would still then be able to cover the Tokyo lows, these Asia lows that are still yet to be filled. That would also give us an opportunity to cover some of the wicks as well to the left just here. And in terms of the 15-minute candle, what that's going to look like would be even better. 15-minute candle would obviously be looking bearish coming into that area, but when that 15-minute candle closes, we will have a wick entry on that 15-minute candle, and it will look something like so, pulling us into some profits, and then to lock off some, bring our stop loss into break even to protect the capital. With that said, very mindful of the trading range that we have. It's not the biggest, around about 40 to 50 pips depending on our entry, 41 pips potentially at the absolute maximum. However, with that said, once we are able to take a very nice entry and look for those confirmation on the 1 minute time frame, that most certainly extends our targets in terms of our risk to reward ratio. So getting in nice and early, getting in on a lower time frame break of structure, still having your stop loss to protect those areas, but of course your stop loss range is a lot smaller. That would allow us to gain a lot of profits in such a trading range in terms of 40 pips at the moment. Now, what else can we look at in terms of coming into the markets on Monday morning? Well, we can see price is potentially coming into this area. As we can see, bottom left-hand corner, there is a 4-hour order block, which aligns beautifully with that 4-hour 50 EMA. And what can you see? We just used the facts. When prices come into that 4-hour 50 EMA, it has rejected. Prices come into that 4-hour 50 EMA and rejected. So we can look to anticipate, simply based on the facts, more of the same. When price gets into that area of the 4-hour 50 EMA, paired with the fact there is a 4-hour order block, top left hand corner, you can then see that we've refined that order block down to a 1-hour order block as well, just to build that confluence. And then the final cherry on the cake is that we can see that there is a 15-minute order block in that region as well. So much the same in terms of entry criteria, be looking for price to get into that area. The higher we get into that 15-minute order block, the better. That will allow us to look for those lower time breaks of structure, have a very nice stop loss to at least cover these highs, and to be quite honest, the majority of structure in and around that area, a very conservative stop loss of 10 pips on AU should more than likely be able to do it. So we've got 12 pips just there. So 10 pips is already looking to cover that stop loss nicely, and then to bring that trade right down to the extended area of that 15-minute order block is looking already at close to 4% return on our investment. So that would be my positioning going into London Open on AU. We've got a beautiful trading range that we can look to manipulate going into that trading session. However, with that said, in terms of higher probable setups, of course, just bringing your attention to that center chart on the daily chart, what we can see of late, that price has closed below that daily 50 EMA. And if price does come back up into that area of that daily 50 EMA, then of course, judging by this arrow, I'll be looking for a short position. With that said, it's difficult to look at structure at this time, considering that is how price is looking on the daily 50 EMA. So I'm not too concerned with overall structure at this time. But what we can say, and it's very evident that after a higher high, we're looking for that higher low before potential continuation on that daily time frame. However, there's no need to overcomplicate the trading. As an intraday trader, we can be mindful of the overall structure, but so long as we're covering areas that we need to cover, our take profit rate or break even range is in and around a good area, then we're always going to be on the correct side of the market regardless. So looking in terms of a short from this daily 50 EMA would be a nice setup in around that area. You can see just here highlighted, we do have a 4-hour order block there as well. However, on the flip side, what we can see is that if price does get into that area, price would then be above that 4-hour 50 EMA. And as I've said previously, price is respecting that 4-hour 50 EMA. So once price closes above that, in terms of an entry from that daily 50 EMA, we would definitely going to have to manage the trade more aggressively, considering once price breaks and closes above that 4-hour 50 EMA, we can expect a continuation with price. Will still give us our rejection towards that 50 EMA, but if I draw the illustration on for you, we can then expect an entry to take us from the 50 EMA, reject on the other direction for that 4-hour 50 EMA before a continuation in the other direction. However, with that said, if it is a very large 4-hour candle that is printed, or is printing at that time, like so, and let's say we still have, call it 2 hours left of that 4-hour candle, then it would be even better, because what we could expect is a rejection from that 4-hour 50 EMA once that 4-hour candle closed, and that candle essentially flipped bearish, leaving us, as I've explained on previous positions, with a wick entry with the wick there to the high, indicating that price is indeed respecting that 4-hour 50 EMA. So we've got two plays in terms of trading from that daily 50 EMA, which, as we look at the chart, just aligns and it makes sense as you start to bring the facts into our trading. So here's a trading range that we do have. We've got the daily 50 EMA up there that we are also going to be looking for a short. So if I clone that and move that up to the highs to give myself an indication of what I'm going to be doing, and then we've got our more intraday trade that we're going to be looking to anticipate and manipulate come London Open. So let's see how price reacts in and around that area. Now, just to bring your attention to the secondary pair before, or the second pair before I call that a day in terms of the chart analysis on the weekend. Again, as I always do, is going to get ridiculously boring, but the weekly time frame, bottom right hand corner, just looking as always previous weekly highs, weekly lows, and any areas of wick imbalances that we can look to superimpose on the lower time frames to see if that's going to line up with that lower time frame and structure. If it doesn't, we simply get rid of it, and we look to, and we're forced then to build bias up from scratch. However, what we can see in the immediacy is that our higher probable setup will come again from that daily 50 EMA. Why? Well, as you look at the trade or price action in the center center chart, price of late, if you just take in the immediate price action like so, price is bearish. So we're going to stay on side. We're trading with that structure. So once price comes into that daily 50 MA area, again, we have a look to see how does that fare across the time frame. So what we can see here, that daily 50 MA on the 4-hour time frame, it's aligning perfectly with the 4-hour order block that's there. What we can say in trading against us is the fact that price has now broken above that 4-hour 50 EMA. So what we are also looking for is price to come into that 4-hour order block at the lows here on that 4-hour time frame before rejecting that 4-hour 50 EMA to take us then up into that daily 50 MA 4-hour order block to take the trade in the opposite direction. However, with that said, much as I described earlier, since price is obviously it's now broken above that 4-hour 50 MA, we're looking for rejection from that area to go back up. Once price does come into that daily 50 EMA, we are going to be against intraday price action, meaning that we are going to be then trading against that 4-hour time frame and against that 4-hour 50 MA. But as I always say, we'll use a 4-hour 50 MA as an immediate target for the short position. So how that's going to look, if I clear the charts a little bit on the lower time frame with that illustration, looking over to the top right hand corner on the 15-minute time frame. Let me just make sure I've got the range correct. So we've got the 4-hour 50 MA, which we'll be looking for immediate long positions come Monday morning, and we have the range up here from that daily 50 EMA. So the range is 80 pips. So again, no need to be the first person into that trade and into the long position, and there's absolutely no need to be the first person to take the short position. So what must be said is we'll wait for our confirmation. In the immediacy, the 4-hour 50 MA trade does look like a beautiful setup in terms of refinement. We've got that 1-hour order block in that area as well, and I can see some white, so potentially there is a daily order block there as well. Negative, so that's from a little bit lower, but certainly if we bring that chart down, we're focusing on this trading range just here, top left hand chart. So as I said, we're looking for that confirmation. There is no 15-minute order block at this time, but as you can see by my illustration, it's not going to be an immediate long position. We'll wait for the 15-minute candles to present us not only with a lower time break of structure, but potentially a break of 15-minute structure. Not necessarily these absolute highs just here, but let's say, for example, Asia is giving us this on the fifth. Let's delete this or move that to the side. Let's say, for example, on the 15-minute, Asia is looking something like so, and price comes into that area, then potentially a break of that 15-minute, come back into an imbalance, of which would have, or we can expect a 15-minute order block then to be left there at the bottom, then our lower time frame break of structure for that added confluence, and then we'll be looking to ride that position to the upside. How that's going to look in terms of risk to reward, potentially like so. EU, so 10 to 15 pips is more than enough, more than usually, so 15 pips there, and that's giving us a beautiful range up to the highs of at least, as I say, a 1 to 3, my normal risk to reward ratio. However, if price is looking good, I'll take off 75% of my position at 1 to 3 and let the rest ride to my other directional trade bias at the top there for a potential 1 to 5 return. So that's how I plan to take Euro US dollar going into Monday morning, potentially one of the favorite pairs that I'll be looking at. There's a clear trading range, there's clear margin there in terms of not forcing an entry. There's no need to be first in the trade, as I say. So I hope you've gained a little bit of insight into the way I chart, into the way I trade, and my mindset going into the pairs. And just to finish off, we'll touch on that DXY again, just to give you a nice illustration of how that all ties in for me. So, for example, if we are saying that potentially the DXY could give us a nice pullback on Monday or going into the week, so strengthening the dollar, if we then pair that against the GU or GU in general, strengthening the dollar would mean that GU is obviously going to move down. So GU could potentially move down into these lows area before looking at turnaround, before looking for that long position. If we pair that then against, let's say, Euro US dollar with the DXY strengthening, if the DXY strengthens, then of course Euro US dollar will then come down potentially into our long areas that we're looking for. Then once the DXY finds its resistance at the highs and then gives us our rollover short on the DXY, that will be when we can then look for our long positions on, let's say, GU, EU, from these areas just here, or even perhaps just here. And if we just double check AUDUSD, which I do like at the moment, is as it's kind of moving independently of the DXY. However, again, what we can say, if the DXY starts to find some strength, then of course AU will then start to come down into our area of interest, looking for the long position. And then, as I say, once the DXY has its rollover short, then our long positions on AU will then come into play from particular regions. Thank you very much for listening. As I said before, I hope that does help you in your trading journey. My name is Charles of FRGNT Daily Chart Analysis. Do take care. All the best in your trading.